Okay, welcome to Market Insights. This is my YouTube channel that I've created to talk about markets, economics, stocks, bonds, trading, investing. Um, I thought I'd do this because since this is what I do all day anyway. I'm an investor. I invest my own money, and I thought this would be a good medium to discuss the markets and summarize my thoughts and discuss and maybe help some of you with your investment decisions to learn, so you can learn more about how to think and principles maybe is the right word for investing or trading, if that's what you're into. We're gonna be covering a lot of different things here. We're gonna do some stock analysis later on, as well as macro trends, a bit of technical analysis as I'm learning it more. Discussing markets, and I thought, this would be a good way to do it. So welcome, boys and girls, gentlemen and ladies and gentlemen is what you say, right? So this is gonna be terrible at the beginning when me talking, but the information is gonna be valuable, but it's gonna be a bit all over the place as I navigate how to do this the best way. So bear with me. No pun intended. So welcome. Let's get started. I thought we were gonna start with the S&P 500. So this week is obviously very important for markets as a whole in the whole world, with the American inflation coming out later today, as well as the Fed rate meeting decision on Wednesday. So what can we say about the S&P? We've been in this uptrend pretty much since October, and we are now at August highs again. Now, what is this fueled by? If you haven't been living under a rock, you probably know that the AI boom is real. There's been a lot of FOMO going into markets, and this move has pretty much only been credited to big tech, so Nvidia, Apple, Microsoft, Amazon, all of these big names, right? Because everyone wants to buy in on AI and how that's going to change the world, which I agree with. Although it could seem like it's been discounted a wee bit too fast into the future at this point. So these levels, if you have bought in and you got this right, congratulations, well done. If you haven't and you're thinking about buying in here, FOMOing in, I would be cautious, right? Because the S&P equal weight, I think it's pretty much unchanged, or maybe it's up 2 or 3% now for the year, while the S&P with the weights as they are is up 12, 11% year over year to date. Sorry, that should be a cautious sign, warning sign for you to maybe hold on and wait at least this week, since the markets have been pricing in a Fed rate pause tomorrow. We'll get to that in a minute, and so that is also why this, you see, we broke up. I'm not that big on technical analysis, but we've broken through this price channel here yesterday. Will that continue? We will see. It all depends on the inflation and the rate, as I said, but we will get to that in a minute. So S&P, very strong, fueled by big tech, fueled by Nasdaq, fueled by Apple, as I said, Nvidia, all those names. Everyone's crazy about AI. It's gonna be interesting to see what happens. As I've said, I've already basically talked about this, right? But the big tech names been fueling this. If you want to look at some technical indicators, you can see RSI is pretty much overbought at this point again. We had that reading here, and then we dropped down, and then we got up again. So RSI is very high. Stochastics, no one negative divergence here, so but they went up. So if you're into technical analysis, what this basically means, we have negative divergence here, if you look, but the stocks have been going up. So that is a weak sign if you're into technical analysis. We have a positive MACD still, maybe starting to roll over a bit. We will see in the coming days what happens. But yeah, I would be cautious. So what's fueling this is AI and pricing in a Fed pause. Would we see that? I will reveal what I think in a minute. But yeah, what about Russell, the broader index, Russell 2000? We have seen a bit, it was basically flat for 3 months, 4 months, and then we got this breakout over the 200-day moving average, which is a good sign if you're a bull. You want to see some rotation, more stocks participating in this rally that we've seen here. Not just big tech, it's pretty shallow, and it's not what you want to see if you're bullish. So this could be good for the bulls, that more stocks are starting to participate in this rally. And I would also think if you haven't bought into this tech stuff and you're thinking about, I wanna start investing now my money, I would probably want to look at the Russell 2000 companies in there as better opportunities right now. I believe you're gonna see a tech sell-off at some point. When that happens, it's obviously very difficult to call. Could be this week with the Fed, could be next week, could be in a month, I don't know. But if you're looking for opportunities, right, because we want to buy stocks that are cheap, not that are all-time highs or close to all-time highs, I would look at the Russell 2000 and companies in there that have not been participating as of yet. So, and as I said, broke out over 200-day moving average. Nasdaq is way ahead of its 50-day moving average, as well as the S&P usually have some kind of mean reversion at some point. So that's also a caution sign. But yeah, what does this all depend on, this rally then? This week is probably one of the most important weeks, I would say, in maybe this year, maybe for the coming months as well, because of inflation, right? So we have the core inflation at 5.5%, we have consensus forecasts at 5.3%, and this is what this inflation year with the energy and all that, it's more, the Fed more looks at the core inflation, or the core PCE, which we had earlier as well, and that was 4.9, I think, so still very high from the Fed's goal of 2%. Now, the markets are pricing in a Fed pause here. They've been hiking very aggressively. They've never hiked this aggressively ever before in the history of capitalism, basically. So the markets are pricing in a pause here. Do I believe they're going to? No. Why? Because one, inflation is still very high. It's way above target of 2%, and if they want to be congruent with what they've said, they cannot pause since inflation hasn't been coming down. We'll see after today, maybe that could change, we'll get a way lower reading. Anything could happen, basically. Predicting this is not my job. But say we get 5.3, still way too high, right? And what is the Fed's goal? It's to get an economic contraction to slow down the economy to get inflation down. And the way to do that is to raise rates, which they have done. But we have still not seen the unemployment rate move basically at all. We got strong non-farm payrolls a couple of weeks ago, and unemployment is still extremely low. So if they want to be congruent with what they've said about getting inflation down and slowing down the economy, they haven't said slowing down the economy maybe, but that is the Fed's goal. Don't believe anything else. They want to slow down the economy because that is the only way to get inflation down. So with that said, I think the markets have been pricing this wrong. You could see as well as the bond traders are now beginning to price in the possibility of a Fed hike of 25 basis points and rates going up and markets going up. It's usually not how it goes. It's usually rates going up, markets going down. So we will see what happens. It's a very interesting week and could be a lot of volatility in the coming weeks if the inflation still remains high and the Fed decides not to pause, which the markets have been pricing in, as I've said multiple times now. But that is the key, right? Because if you're thinking about going in here, is the Fed gonna pause? I don't think so. You do with that information, you can do whatever you want with that, but I would be cautious and wait and see. Fed balance sheets been tapering off. We have not seen that reaction in the markets. As we've talked about, the market's been going up. That's also usually not what happens. But the markets can remain irrational for a long time. So be dangerous about going short everything as well, because that could obviously be painful from time to time. But yeah, so the economy is not, basically summarize this, is that the economy is not slowing down as quickly as the Fed might have hoped, and therefore they cannot pause with the rate hikes at this point. If they want not to look like fools as well, because they want to save face, right? They can't say one thing and then do completely another. Just what the markets are pricing in, they have to cancel out that noise, and that is usually what they have done as well. So yeah, I don't think the Fed is going to pause tomorrow. The markets are, and that is why I think we're gonna see some pretty big volatility spikes in the coming weeks. Yeah, I think that's about it, right? Very interesting week. Welcome to the channel. Let's see what happens. Should I have an outro? No, I will I will maybe figure out an outro. We can discuss in the comments what you think about what I've said here and what you think about what's going to happen this week. Yeah, happy trading or investing, and good luck.